All right, cool beans, y'all. I'm gonna go ahead and get started. It's 5 minutes after the hour. For everybody who's not here, I'll drop it in the Telegram group for those. But I'm gonna go ahead and jump into it. I think Carmen gonna be joining us here shortly, so she will be going over the beginning of the week fundamentals after I'm done with the technical analysis. So let's jump right into it. All right, looking at the dollar, right? Last night we had a push up into consequent encroachment of Friday's daily range, which you see here. We opened here yesterday and we pushed up into consequent encroachment around 5 a.m. this morning. We respected that consequent encroachment level and pulled back down to the PD array, the discount level of Friday's range. We respected the 62 level. And we see for today's range, we pushed up off of the PD array to run buy side liquidity for the dollar. So if you was analyzing the dollar throughout Asian markets going into London today and into New York opening bell, this was textbook ICT setup and distribution to the buy side liquidity. So easy money. I will drop the new markups for the new daily ranges in the group tonight after the call. So let's just move on to currencies really quick. We got our retest of the premium array here today. We see we respected that 79 level and push back down through it to come back down and run sell side liquidity. We didn't run sell side liquidity exactly, but we got close enough. So if this was a sale you was in, you should have definitely been out of this trade by now. I mean, you was only what, 1 pip away from TP. So yeah. Now I'm looking at this city, sell side imbalance, buy side inefficiency. And I want to see price draw back up into that and see how we react to that level. So I'll be paying attention to that throughout the rest of Asian and going into London, looking for a New York setup. GBP USD. Yeah. See if we pull up into this. Yeah, let's see what price action gives us throughout the rest of Asian markets and going into London. I want to see us pull up into this imbalance right here. We got two fair value gaps right here. So of course we'll be looking to run into this one first, see price reaction to that. If we break through it, we'll be looking to run into this one and see price action, reaction to that level. So same thing, GBP, I'm sorry, NZD USD. Looking at metals, we are at the discount. We are at the discount range, Friday's discount range. So let's see, we ran Friday's buy side liquidity today. So let's see if we respect this discount range. Discount area, or if we break back below. If we push up above the 62 level aggressively, then we come down and retest it and respect it, then I'll be looking for us to pull back up into this. There's a lot of imbalance right here. So let me see something. To the 30 minute. Yeah. Fair value you get right here. Let's see. Right there. So that's what we'll be paying attention to. See if gold pushes up in there off of the current discount level. Same thing for silver. Uh, Looking at oil, I just don't know what oil want to do, y'all. I hope Corman got some news for us tonight with oil. Let me see something. We got back down below 75. I just want to see us get above here. That's all I want. That's it. That's all I'm waiting for. So let's see what oil give us this week. Let's see. Looking at S&P 500, you really get a lot of movement out of S&P today. I wanted to see us reach for the yearly high. We reached for it, but we didn't run it. And then we broke back down below the new week opening gap, which is right here, which I have outlined here in this purple mark. So yeah, we're gonna see if we pull back up into the new week opening gap throughout the rest of Asia and going into London and see if we hold that level, see if we respect it. If we respect the new week opening gap, then I want to see us come down into this PD array. I do have to go and mark today's daily range, but this PD array is still relevant. You see that inside that PD array, we have what, a fair value gap. So I am looking for price to be drawn down to this area, being that we got a discount level here and a fair value gap there, and sell side liquidity right below it. Let's see what happens throughout the rest of Asia and going into London. And that's across futures. So U30 as well. I want to see us pull down into the discount array, and US 100 to NASDAQ 100 as well. Last but not least, crypto. It broke down. Let's see. Foreman. Let's see if we hold this level we at. If we hold what we currently at 28,000, then you know the next level I got marked is 31,775. Same thing for ETH. Next level to the upside, 2,200. Didn't get above that fair value gap for 8. So let's see if we come back down to $3.60. Accumulate some more position there for us to ride up to $6. And that'll do it for the beginning of the week technical analysis, ladies and gentlemen. That being said, I'll pass it over to Corman. It's all yours, Corman. I think Corman having some trouble getting her microphone to turn on. Y'all give her a second. Did that help out, Corman? All right, I think she's ready. Ready, guys. You ready, Corman?
Oh yeah, I'm ready. I didn't come on here to say a whole lot to y'all tonight just because I am in my I told you so mode. So I'm just gonna try to be real chill. But I'm not saying that everything I say is like 100% correct, but usually it's like at least 95% correct, depending on how diligently I researched and did everything I needed to do. Now, for the 3 people who may or may not listen to this, who called me today asking me what they should do about cash, because now they realize that what I said about cash disappearing is true. Don't call me no more. Don't bother me. Don't call my phone. Don't do nothing. You had your chance to listen. I'm tired of giving advice. Tired of giving free advice, because people don't listen. But you know what? If you get on this call, I'll talk. Anyway, whatever. I'm done. So, all right, on to some relevant news for this call. So I did want to talk about just still piecing together news that is going to be coming out this week in relation to just things that could possibly come up later this year. So we haven't really talked about it, or maybe I mentioned it briefly, but there are several CEOs, CFOs, C-suite staff members who are selling stock, and not just selling any stock, actually selling stock of their own company. So this is very telling, because normally whenever you are in a corporate position, you're trying to save face and give a good look for the company that you represent. But also at the same time, you have to think about it too. These people are human, and any money that they have invested, if there is a chance to take out money, they're going to take it out. So the companies for which this is happening, it's kind of interesting because they're financial sector businesses. So BlackRock, you think about BlackRock, you think about the assets that they hold, not just in the US, but globally. Those assets have a lot of weight, not only in terms of the company itself, but also how governments look at this company. So when you have C-suite staff within BlackRock selling their own stock, it's very telling. Whenever you have Visa's C-suite staff selling off stock to the tune of about $4.5 million, it's very telling. What that tells you is there is a lot of profit taking that's happening right now. And if you actually look at Visa's chart, I'm just going to go to trading view, and we'll just look at it really quick. Because this is going to really paint the picture if I just show it to you. So I'm not going to look at Visa on the daily. I'm actually going to go all the way out and look at Visa. Let's just do 12 months. All right. So if you look at this chart for Visa, this is like a 12-month chart. You can see what I'm talking about here. This looks kind of weird. Hold on. Let's just zoom out to a 3-month chart. Yeah, this looks a little better. All right, so yeah, this actually really paints the picture a lot better. So if you look at Visa, and you look at the high of Visa, and you look at where Visa's price is now, this is pretty much like near the top. If you do a lot of the math for what it would take for you to kind of figure out, is this like within the top 10% or so of price? Yeah. So to know that you have C-suite staff within Visa selling stock when price is like near as high, when you have all this talk going on about digital transfer systems, how third-party companies can actually help to kind of fill a particular gap that's there in the market. Visa's like, when you think of Visa and MasterCard both are top companies that you think of when it comes to transfer. So it's a little odd, but at the same time, now tying this into this week, tomorrow we have JOLTS jobs. important jobs number, but Wednesday is going to be the day. So these companies are looking ahead. So remember last call, we talked about companies looking forward and not just, a month, 2 months, a quarter. This is like a long-term vision and view of their company. One thing I can say is that a lot of companies abandoned that view. Kind of side note to it, they abandoned that view during COVID because COVID caused things to be so uncertain that they couldn't plan out as far ahead as they really wanted to because you just didn't know. But now you have the Fed giving you information. So this is forward guidance. Forward guidance provided by the Fed is in place not only to help not only to help businesses, corporations, banks, but also to help the average everyday consumer. However, the average everyday consumer does not know how to interpret forward guidance and to interpret the things that the Fed says. So most people are not able to take advantage of this information. So this forward guidance, what the Fed is going to say on Wednesday, because we won't have a call until after this. So when you're listening to what the Fed has to say, you're wanting to hear them talk about these rates, period, point blank. Is this going to be the last time that the Fed increases rates? Do they feel like they've done enough in order to kind of get us through to a point where we can stop raising rates? If we have gotten to that point and rates plateau, meaning they don't change, they stay the same for a while, this means that companies are going to now be able to do more planning, figure out what they're going to do in the future, which can help and benefit the consumer. It also helps and benefits the consumer because you know that an implication of them not raising rates anymore means that they feel like they have gotten inflation under control enough to the point where they don't have to keep raising rates, which means for the average everyday consumer, that should mean when you go to the grocery store or to a store or to buy anything, that it should be a little bit easier on your pocket. How much easier is determined by where you live, all those, where you shop, those sorts of things. But it should be a little bit easier on your pocket. And also to know that if the Fed stops raising rates, then okay, whatever credit card debt, loan debt, adjustable rate debt that might be out there, that the rates, you can anticipate that they're not going to increase as sharply anymore because these companies still do have within a certain range of time to still continue to increase rates before they have to just meet the Fed and plateau them as well. But it means that debt gets not cheaper, but it doesn't get more expensive either. So as we look at these numbers on the Forex Factory calendar for this week, and we hear the Fed talk about all of these indicators for the economy, we have to now start taking a more forward guidance, more forward thinking thought process towards all of this information. Now, we've already started to see the market respond in a negative way to how much the rates have increased. We've already started to see signs within the banking system that the banking system can't handle a lot of what's going on. And you might say, well, JP Morgan's doing fine, Goldman's doing fine, Bank of America's doing fine. Well, no, You don't see cracks in the system at the top. You see cracks in the system at the bottom. So when you're looking at the system being the United States, when you're trying to find cracks in the system, you want to look at the bottom. You want to look at small businesses. You want to look at medium-sized businesses. You want to look at small banks, and you want to look at medium-sized banks. If you look at everything that has happened in the financial system, it has been smaller, regional sized banks. So what that means is that the Fed's stress test that they always talk about that they do on the banking system does not account for these factors that happen in the system, and it doesn't take enough into account when it comes to small banks. So what does that mean for the average everyday person? Well, if you have less than the insurance limit for the FDIC, not much, because you're still going to get your slip of paper signed, stamped, all that kind of stuff. Should something happen to your bank, where you can just go to another bank and say, hey, look, I was a customer there, I'm coming here. Done. Easy. Now, if you have more than that, you have to take more thought and consideration into how you spread and diversify and where you put your money. So most people, average people, aren't just going to have 250K just sitting in one bank account doing nothing. But the banking system in and of itself now has started to show cracks, as I said, but those cracks have to be filled and repaired. And how does that happen? So if you look at what happened with all these regional banks, you look at this most recent incident, you look at where troubled assets had to go. Your troubled assets in 2008 mostly went to the government, JP Morgan, a lot of these larger banks that were able to account for it on their balance sheet. Now, with this crisis, where did troubled assets go? To the bigger banks that had room for it on their balance sheet. Now, the thing you have to do if you are just concerned about the banking system, concerned about your bank, is do the exact same thing a bank would do to you if you were going to go take out a loan. Your debt to income ratio, you need to go look at that exact same thing for a bank. You need to go look at their rate of capital to how much they've loaned out. Like that loan to capital ratio is like the exact same thing for banking as opposed to humans. They're synonymous. So go, and if you look at it and you're like, ooh, their debt is really high and they're really not bringing in that much, red flag. That doesn't necessarily mean go, but that means that they have a particular characteristic that is not favorable, and now you really need to keep an eye on it. JP Morgan, BlackRock, Blackstone, when you start to look at a lot of the larger banks and a lot of the larger entities that take on troubled assets, and you look at how can I put this? You look at how they structure these assets, they take it in and then they kind of put it back out into the marketplace. That putting it back out onto the marketplace somewhat is going to be influenced by the Fed's fund rate, because this also kind of influences the overnight rate. That also influences how much of these assets they can put out on the market, how much they're going to be able to get for it, because if an entity wants to buy it, they have to get the money, but at what rate are they going to get the money? So this influences how businesses invest. This Fed funds rate is not just indicative of like how the Fed is going to be treating rates solely. It also impacts and has influence on other things within the marketplace. So moving on to Friday, not going to talk a whole lot about Friday right now, but jobs numbers. So all of this sounds good. You know, we're kind of putting all these concepts together. But when you have corporations that have a hard time getting money, and they're having to deal in this overnight rate, you know, Fed raising rate situation, money becomes more expensive for them. You have to go back, sit back, kind of think and realize like, okay, well, if corporations having a hard time getting money, or if it's more expensive for them to get money, they're going to be less likely to want to expand. And if they do, it has to be something super amazing and in a brand new market where they know they're going to make money. Case in point, Apple. Apple made this big move into the Indian, moving into that South Asian market to try to capture a lot of, first of all, that global area. That is one of the most densely populated areas on the planet. The 3 most densely populated countries on the planet are in that area. And you can be closer to what is now going to be like a somewhat ending phase within the semiconductor region of Taiwan. But you can just put yourself in a market that is brand new, explore marketplaces where people aren't struggling with money. The US struggling with money. Segue into my next point. The US is struggling with money. The US is struggling with the value of its money. The US is struggling with the fact that people internationally don't want the dollar anymore. Interesting story. I tried to send my grandmother some money, and I asked her if she wanted me to send her money on PayPal. And then we have like this other like app we use. And she was like, neither. And I'm like, why? She was like, because it's going to send it to me in the US dollar and the value sucks right now. Like, well, how do you want me to send it to you? So she wanted me to send it to her in euros. And I looked at the value of what I would have sent in euros versus the US dollar, and it was pretty interesting. Nobody wants to touch the dollar. If wait, I don't know if I put it in the group, but I will. There is an article that is talking about how now the dominancy or the dominance of the US dollar has decreased. There are certain metrics that they use, they being the IMF, the International Monetary Fund, uses to measure dominance of a currency within the market, within their own market and globally. And according to 4 of the 15 metrics that they use, for the first time ever, the Chinese yuan has passed the US dollar. So for those people out there who are like, oh, the dollar's so strong, no one will ever give up on the dollar. Well, guess what? China's now passed us in 4 out of 15. And they passed us in 4 out of 15 in just the last, well, since the beginning of the year. So that tells you a lot. That says a lot. I just want to ask this question, and I want you to think about it. I'm actually going to ask 2 questions. Have you been to an airport recently? And if you have, what's been missing or closed at the airport? Actually, I have another question. 2 more. If your bank used to have a coin machine, does it still have a coin machine? And if you've been in any retail store like a big box store or whatever that had a coin star or a coin machine at the front, does it have it anymore? Just asking. And if you don't know, just go check. Just wondering. Because now you're starting to see a lot of those elements of currency how can you put it? When they're trying to drive currency up in the marketplace, there are like certain things they do, taking away coins. So like ever since the quote unquote coin shortage, you can go to the mint, you can actually look at how many coins, how many bills they've produced and put into production. A lot of it currently is recycled. A lot of the coins that are out, if you look at the metal distribution in coins, it's not the same. A nickel is not what a nickel was during the 08 crisis. And even that nickel was not what it was, during the dot-com bubble. But it was at least somewhat similar. So the composition of coins is different. The sourcing for how they make the dollar is different, meaning the paper, the ink. So even though it has to meet certain standards, because you have to know counterfeit versus, what's real and all those kind of things, like pay attention to like these websites. Like, I know I drop a lot of websites and information, but they literally tell you that even though everything that kind of happened around FedNow, FedNow is not new. FedNow has been a proposal. If you go to congress.gov and you look at and you search the keywords, the same keywords that you will find in the FedNow document, search them in congress.gov and see how long ago they've been talking about FedNow. That's how I kind of knew back then that, the dollar's not going to be here to stay. What's going to be next? Well, they've already put it out there. Everybody already has a wallet. So the structure, the infrastructure needed for FedNow to be possible, meaning everyone having a wallet, is done already. That was done when everyone was like, yeah, I want a stimulus check. Give me a stimulus check because it's COVID. Y'all was so, not y'all, but all the other people who's going to be listening to this, y'all were so worried about getting a stupid stimulus check that guess what? They slid that in right under your nose. And so now when you're like, I don't want that, guess what? You wanted it because you took the stimulus check. And that's what came with it. So, I mean, it is what it is now. You didn't read the fine print. So now that the fine print hasn't been read and you stuck with the consequences, guess what? The Fed is going to keep rolling on this train that they're on. So now you're wondering, well, what's next? Well, now that the FDIC is having to bail out another bank and they had to go to the Treasury to get money because they exceeded their limit because they had to bail out 3 other banks within the last 12 months. Now the Treasury is getting ready to hit a debt limit ceiling, and they have to now figure out where they're going to get this money from. And every time you hear Maxine Waters and someone say, oh no, this isn't a bailout, it's not coming from the taxpayer. Well, guess what? When the FDIC runs out of money and they have to go to the Treasury and then the Treasury has to go to Congress, guess where they get the money from? The taxpayer. So yes, it is a bailout. So you're paying for it. Not only that, but so many thoughts around that. But anyway, let me just move on. So at the end of the day, don't let all of this talk about FedNow make you feel like it's something new that the Fed is trying to spring on you. The best thing I can tell you to do is you don't even have to do it daily because then you'll just become obsessed. But on a weekly, bi-weekly basis, just go to congress.gov, search keywords, and just see what pops up because they talk about it. Like, a lot of this stuff can't get through to become official without being put on that site and put into writing somewhere. Janet Yellen I already mentioned her. I mentioned the debt ceiling, but I really do want you guys, and this will be the last thing and I'll go. I really do want you guys to start also just Googling. If you didn't pay attention to the document from the Financial Stability Council that I put into the group chat, please go pull that document up and just take note of the leaders that are the head or the heads of those entities. There's like 10 of them. Jerome Powell's one, Janet Yellen's another. You have just presidents of like different entities that actually control finance in the United States. The reason why I want you to kind of have these people in mind and know them is because I also want you to just go type their name into YouTube. Type their name into YouTube and watch how many speeches come up that aren't even held in the United States. Like, look at how many speeches Jerome Powell has, and he's sitting in Switzerland somewhere, or he's sitting in the ECB, sitting beside of Christine Lagarde. Like, there are things that happen right in front of our faces, but because our media is so biased here in the United States, there are certain things they're just not going to show you. So you have to be active in seeking out certain information. People ask me how and why I know. I just seek out information. I just like start with keywords and I just type it into Google and see what pops up. I type it into YouTube. I see what comes up just because I want to know. And like one keyword will lead you to another video. Before you know it, it's 2 o'clock in the morning and you're sitting there looking at a video like, man, it's late. So anyway, I'm done. Hope you guys learned something or found something valuable in what I said.
Cool beans, cool beans. That was saucy. As always, you never cease to amaze, Carmen. We appreciate you and everything you bring to the table. At this time, I'll start the recording and take any questions.